Hi, and welcome back. This week I'm going to be talking about the whirlwind the stock market's been in and the changes that I've made over the last week. So as you can see, put in about $100 again this week. On the week, I'm up a little bit, not a ton. As you can see, continued that downslide, and I'm starting to recover from that. Most of that came from Friday when Donald Trump announced that they were in talks with China, and the stock market basically responded to that and started doing a lot better. So all time you can see I'm down about $10, not the end of the world. I've been up most of the time, but as the market got hit really bad in the last month, obviously my portfolio has gotten hit as well. So we'll go ahead and look at my ETF right here, Vanguard Total Stock Market. We'll just look at the month. So as you can see, just like my portfolio, it's down 3% on the month. I'm down basically 0.5% all time. So this is a pretty good indication of how the market's doing as a whole, and I don't think it's the end of the world. So I'm down a little bit on that all time, just under 3% on that purchase. But again, not the end of the world because I have more money coming in every week, and the stock market as a whole has been down. So then we'll look at Vivint Solar. Bought 3 more shares this week, back up to about $8.10. As you can see, it's still down on the week, but I am still at $48 all time, 38 shares. Average cost keeps rising every week as I continue to buy, but I still think that they're going to make money and they're going to do better in the long term. So as we continue to see in the last year, steady climb, and drop down, but it looks like they're headed back up. So I'm excited about that, just as I am every week. Agilent, not too interesting. Microsoft, not too interesting. Logitech, not so much. Pfizer is one that I am pretty interested in right now because I've read basically that Pfizer is a company that's consistently making money and is a stock that you want to be invested in. And they've taken pretty much a nosedive, as you can see, down 10% almost on the month. So this is, from everything that I've read, a pretty good buying opportunity. A company that's dividend, I think, is paying between 3 and 4% right now. So I'm looking to buy more Pfizer in the future. So even though I'm down quite a bit, $17 on those 2 shares, I'm not concerned about it. And I actually think it's a good opportunity to buy from everything I've read. Not an expert by any means, but I am excited about that. Four Corners Property Trust, it's not done really a whole lot. It's sitting right about what I paid for it, which is not the end of the world. That pays, I think, about a 4% dividend too, so I'm pretty happy about that one. Sony, as you can see, I'm up a little bit on that one, so up $2 all time on those 2 shares. And it's not a ton of movement. They don't pay a dividend, but it's a company that in the long run has done pretty well. So as we can see in the last year, it was down, back up. Last 5 years, they're consistently doing well. So that's a company that I'm continually investing in. And then here we've got CocaCola. So I bought 1 more share of Coke this week, and I'm up a really small amount all time, but as I've talked about in my last couple of videos, the reason that I'm interested in Coca-Cola, I think it's a good company to invest in, is because as the market's slowing, as it's been more volatile, they're a dividend king. They're increasing their dividends every single year, and that is a huge, huge asset, especially with the market struggling. Over the last 3 months, I always like to show 3 months in a year. I think it gives a pretty good indication of where a company's headed. So even though the market hasn't looked great in the past month, the past 3 months, it's moving upwards. So even in the last month, you can see over 3% growth. So I bought 1 more share of that. And the last stock that I bought, SPHD, this is actually another ETF, so PowerShares. I think this is a pretty popular one, very low cost, pays a monthly dividend. So moving forward, I think this will be a pretty good asset for me. So we can see in the past 5 years, not a ton of growth, just about 30%. But I'm not too concerned with that because the dividend payment is so high and they pay that monthly. So it's just another one of those things that as I diversify my portfolio and as it becomes larger, I think it'll be a really good asset for me. And that's really the main reason that I wanted to buy that. And of course, I always talk about Bitcoin. It's volatile, it's risky, but I'm invested in it, and Litecoin. I haven't really touched on it a whole lot. I do have a little bit of Litecoin, but I'm really considering selling it off because I have gotten hammered on this one. Down 30% all time. Did have to sell off a little bit of it this week just to buy those other stocks that I purchased, but I'm really considering dumping this one. As you can see on the year, it was up just like Bitcoin, but it's been since late June, pretty steady decline. And I'm not putting money into it, and I'm really considering taking money out because of how much it has struggled. But Bitcoin, of course, as you can see today, it's actually performed very well. In the last week, it's down quite a bit, just about 3%. Even with that steady increase today, not the end of the world, but I'm just I'm going to keep the money I have invested in Bitcoin, I think, and I'm not going to put any more money into it. So as we can see, I'm down almost $30 on this purchase, but I'm not overly concerned with that. I've done decently well on it in the past, and I think I'll just let this sit for a while. On the year, you can see kind of the difference between Litecoin, where Litecoin had that increase, but then late June, about here, it tapered off, where Bitcoin's been in a downtrend, but not nearly as much. And the thing about Bitcoin is you just don't know. We don't know what it's going to do, how it's going to do, when it's going to do that. So that's kind of the rationale behind that. So I have two articles pulled up for this week. The first here is CNBC, where they talk about one of basically the best analysts for stock markets, Jim Paulson, says that we're in a fear bubble. And I'm not an expert, I'm just a college student, but I tend to think that it's this way, that there's no indications the stock market should struggle in the short term, or I guess in the next year or two. It's more that people are scared. So here he talks about how people are just terrified that the stock market's going to crash again, just like it did in 2008. So sure, we're down 2 to 3%, as he says, but he correctly predicted that the stock market would rebound after last year when we saw that decline, and he was correct on that. And basically what he's saying in this article is that he believes this is a really good buying opportunity because people are selling off their stocks and going towards bonds. So here he says, I think the odds favor all of the policy stimulus we've introduced. Fiscal stimulus, policy stimulus, monetary growth, lower yields. It's been 6 to 9 months lag time, and I think it's going to start to improve economic reports. So here, if you pierce the fear bubble, do you have a big rally? And I kind of think that's one of the contributing factors to the upside. If we find out, it turns out better than feared. Many portfolios are under-allocated to risk assets and will have to readjust themselves trying to get more risk, which could drive risk assets a lot higher. So what he's saying here essentially is that as people are moving towards bonds and are trying to get more stability, the stocks haven't done super great, which means that if there is any more growth, if we do see an upward trend in the next couple months, buying now is going to be a great opportunity, and we know that that means you can make a lot of money. It's not a given, it's not a guarantee, but I think it makes a lot of sense. So, and here again he says we've grown slowly close to 2% stall speed we used to worry about the entire recovery. We're at full employment with 4% unemployment. We're in the longest recovery ever now in U.S. history. So there are certain characteristics of being near the end, but character-wise, I just don't see the overextended nature, mainly because we've been so conservative. And so that's just another example of why I think it's important to kind of be aggressive right now. And as a college student, it just makes sense to take more risks because right now I don't have a ton of money invested and I have more time to make up for that. So I'm not trying to be conservative or worry too much about risk. And here's just another interesting one. I talked about a few videos ago how I think Tesla is a horrible stock to have because they can't make money and they've run into all sorts of problems. This week they talked about the basically new product that Tesla's released where they want to be an insurance company for their own vehicles. Warren Buffett, oddly enough, said that he thinks it's a horrible idea, they're going to struggle with it, and he said they're as likely to succeed in the car insurance business as a car insurance business would be to succeed in making cars. In other words, he's not confident, he doesn't think it's a good idea, and it's not going to work. So here in this article, they just give some basic facts. So they say that Tesla believes they can give their customers a 30% discount because they're only insuring Teslas, and clearly they know the vehicles better than anyone else. They also go on in this article to talk about the the fact that Tesla has made money in 4 quarters since 2010. So in the last 9 years, they've only gained in 4 quarters. They're not doing well, and I just don't think it's a good buy. I don't think that there's really any upside to it. Some people are very bullish on it, saying that it's fallen so much, basically 50% off its all-time high, that there's a lot of upside there, but I just don't see it because financially they're struggling and Tesla's had a lot of other issues. But that's pretty much it for that article. So we'll go ahead and look at my all-time profile again here. $2,090. Had 2,100 invested basically, so I'm up for most of the time, and then here we see this dip in the last month. So clearly 3 months not looking great, but you can see that I was on that uptrend, and it even looks here like I'm headed up again, so I'm pretty happy about that. We'll look at on the week one more time. So again, as I said, I was down there for most of the week, but I came back up and I'm making progress, so I'm pretty happy about that. So thank you, and see you again next week.